Hello, good afternoon. You're watching ET Now. I'm Anisha Jain. With me is Ajay Sharma as well as Aisha Faridin. For now, the markets are coming under pressure and quite by a whole lot. The market is actually at the lowest point of the trading session. We have broken below the mark of 350 thereabouts. Just managing to see a bit of a recovery from that level though. It's the Bank Nifty which is the underperformer today, over a 500-point cut on that one. So HDFC Bank is the culprit out there. You also have SBI which is on the back foot. Remember, both of these banking names got downgrades from CLSA as well as Bernstein respectively. So those couple of names in focus. SBI now down over 2% in the trading session. What's holding out is IT. So TCS, HCL Tech, these are two of your top gainers at the index, at least from a contribution point of view, and they are actually inching higher. Bajaj Finance, Cipla are the other names. But from the broader markets, just wanted to highlight a few names. Indigo, after that big block deal has happened, has managed not only to absorb that amount of liquidity, but that stock is actually close to the highest point of the trading session right now. You also have a couple of other names which are in focus. Of course, the entire Tata group of stocks are in the red, but Godfrey Phillips is actually doing quite okay. Geo Financial Services, that stock is up around 7%. Reports are suggesting that they're looking at coming up with a competitor of sorts to Paytm. So maybe that's something which the street is building in. And on the losing side, Aisha, it continues to be the Tata group of companies. So complete reversal and undoing of what we saw last week.
Oh yeah, absolutely. But I think it's important to go a little deeper into why the kind of movement that you are seeing on the mid and small caps. And we will have that SEBI chairperson soundbite as well. The fact that she's categorically saying that there's been now a directive issued to mutual funds to disclose a stress test result of small and mid cap funds starting March 15th, because they themselves feel that perhaps the pocket is getting a little bit overheated. And this, of course, in particular pertains to the lump sum investments that one has seen in small and mid-cap funds. First, let's hear out the SEBI chairperson.
A format of a disclosure which has been approved, and that is mandatory. That's not optional for any mutual fund. They will disclose. I think the date is 15th March. So the stress testing, so let me explain. So what does stress testing mean? Okay, and what is the purpose of stress testing? The purpose of stress testing is to assess that if there is an adverse environment. So first of all, there must be stress in a stress test. Otherwise, what's the point? Right? So if there is an adverse environment, and how is that adverse environment defined? We have discussed with the industry as saying that if there is a significant redemption pressure, because what is the biggest risk that a mutual fund scheme runs? The biggest risk it runs is that it is a daily redemption product, and the underlying market may not be that liquid, and therefore, how do you deal with redemption pressure?
In fact, that commentary and coupled with a lot of commentary coming in on the SME side of the market, which is also, again, the smaller end of the market. Clearly, she goes on to say that there are signs of manipulation in the SME segment. This is also an area where retail HNI is pretty active. Let's hear out that bite too. So coupled these two commentary, the entire texture of the market got completely shaken after this commentary hit the market. Let's hear it out.
Some more disclosure in terms of risk factors. So for investors to understand that the SME segment is different from the main board, the regulations are different, the disclosures are different, and therefore the nature of the risk is different. I think it's important for SEBI to underline that in terms of disclosures to the investors. The second is in terms of actual price manipulation, both at the IPO level and at the trading level. We are working, to evidence that we do see the signs. As I've mentioned earlier in a press meet, that we have the technology to do it, so we are able to see certain patterns. I would say it's still on the kitchen table. It's not yet gone into the oven. That when we issue a public consultation paper is when it enters the oven. But right now it's still on the kitchen table. We're still working with, advisors to try and understand the dimensions, the data, analyze the data. So still at a relatively early stage.
So SEBI chairperson clearly saying that by the help of technology, they are analyzing patterns which show some signs of manipulation in the smaller cap end of the market, particularly SMEs. Nishal Maheshwari is now joining us, CEO Institutional Equities at Centrum. Nishal, you've been in the markets long enough. Are you also looking at signs in the small and mid caps which are frothy. SME, of course, I'm not sure whether you cover them or you're aware of them. This is making, kind of a FOMO and sucking in a lot of HNI retail, which perhaps the SEBI wants to go against and want to warn the investors for.
Afternoon. So, yes, I think it's now pretty well known. Basically, we see a lot of funds have already started saying that they are not going to accept small checks, SIPs and all, less than 25,000 in the small cap and mid cap funds. So I think everybody seems to be worried, but given that the mid cap, which is and the small caps, which are more or less on a fulfilling thing, basically, because more money is driving more stocks up. That kind of a situation. So that's why you're seeing this kind of frothiness. As a market participant, we are worried. As far as the SMEs are concerned, we do not track them, but I hear a lot of noise around there, and issues which are 25, 50 crores are getting subscribed up to they get 1,000 crores, 2,000 crores. So I think that it's a totally different level of frothiness in the SME side. But I think even in the small cap and mid caps, there is a lot of pockets where there is extreme exuberance.
Basket buying which has happened in large caps. Just to mark it, 3 million shares of Reliance, NTPC 7.5 million, Tata Motors 6 million, ITC 12 million, ONGC, ZPFC, TCS. A massive basket buying appears to have happened in the last hour of trade as far as certain large caps are concerned. But we'll come to know these names only later. Anisha, you're saying something?
No, largely this, that there were these series of large bunch trades that have happened, and a lot of these large cap names, as you pointed out, so PNB, Z, Tata Consultancy, GAIL, and a lot of these Tata group of companies, maybe at lower levels, there are some people who are looking at capitalizing all of that trend. But Naresh, if I had to ask you, from these large cap names which are seeing heavy amounts of volume today, which are the names that you would recommend? You know, Reliance, NTPC, the entire Tata group, ITC?
I would be looking out for Reliance Industries first, because that's the one which has been in a strong uptrend. So that on current levels and closer to 2,900 is still a buy. Then comes ITC, because it has corrected quite a bit over the last few months. From a high of almost 480, the stock has corrected well enough. So these are the two names. I would still not be getting into the PSE names, which have already done a large move. They've not even corrected 10% from the top. So would wait out for a correction in the NTPC power grid to again participate. So for now, Reliance and ITC look good in the large caps.
ITC, that is what Naresh is betting on. Just look at some of these liquid movers today, and it's, really a bunch of all that's across market cap categories. Apollo Hospitals has made a decent comeback today, 2.25% higher. There's Nestle, which is perking up 2.5%. REC, Ajay was just alluding to that, holding up 3%. ICICI Pru Life, and their February data is quite impressive in terms of the APE growth. And then there's Interglobe Aviation, which has jumped up about 5.25% as we speak right now. Kunal, two stocks that you do track closely, both Interglobe Aviation as well as Godfrey Phillips, which Anisha was alluding to, hitting life high after life high almost on a daily basis.
Yeah, and typically for Godfrey Phillips, I remember that in 2018, 19, 20, there was a phase where for 3 or 4 years, the stock was stuck into a 300, 400 point band. So I think closer to 2,000, 2,200 levels is where the stock was trading. And from there, the stock in the last, I think, 1 year, I think has done exceptionally well. So this is more of a very steep rise. You look at the last, I think, 1 month of price performance, the stock has gone through a very exponential kind of a rise on a consistent basis over the last 1 month. So I would probably believe that entering the stock at current levels would be a very difficult kind of a catch, because the risk reward is not in favor, and the indicators are already overbought on the short term time frame charts because of the steep run up into the stock price. But these are the kind of stocks which tend to consolidate for a prolonged period of time and then get into a breakout, which is more of a multi-year. Interglobe Aviation also, on the other hand, I think the stock in the last 1 week had seen a sharp correction. The stock had come back towards 3,000, 20, 25 odd mark. And then today it's more of a rebound for the stock price. So I think this could probably bring in a place that maybe the 3,000 levels or slightly below those levels could be a good support for Interglobe Aviation.
Okay, point taken. But as we were pointing out, there are hospital stocks which are bouncing back. So Narayana Healthcare is up 8%, Fortis is up 4%, and Apollo Hospitals is the other one that we were pointing out. So some of these stocks, after that major cuts that we had seen over the last couple of weeks on account of that overhang of the Supreme Court standardization probably of the prices, they're finally recovering quite a bit, and most of these names are close to the highest point of the day. We'll track that and a lot more when we come back from this short break.
Back with closing trades right here in ET now. Another block deal, not just in Reliance Industries, but I think Tata Power as well had a sizable block trade in. For the index, we are pretty much status quo, haven't really weakened any further, but the Tata group of names definitely are seeing an ebb off. I mean, to think of it, they've run up as well pretty hard in anticipation of a Tata Sons IPO, and that's something that we understand from our sources is not going to be such an easy task, wherein Tata Sons themselves are not going to be keen to IPO. And you're seeing quite a bit of that move getting corrected here. Still got a long way to undo all of previous week's gains, which were, of course, pretty hefty. But be it Tata Consumer, Tata Steel, Tata Chemicals in particular, which ran up pretty hard, all of these names are actually seeing a decline. Kunal, any of these Tata names wherein you would be a buyer today in the decline?
Tata Power is something which I would be looking out for specifically. I think that's an interesting chart. The stock after quite some time has managed to break past about that 400 levels, Tata Power, and I think from there last week also the stock had shown excellent momentum. So I think the closer it gets towards 400 mark, the better the risk reward is to enter the stock.
Nishal, do you have a view on Jio Financials? Nishal, the question is for you on Jio Financials, if you have a view on that.
So I think the last balance sheet, the last P&L do not say anything about the company except for that it's got 1,05,000 crore of cash on its books or equivalent cash and cash equivalent basic. I think 30,000 crores of cash and the remaining is equity, Reliance shares. So that's where it is basically. So this is as yet to see any significant business. But then I think in anticipation that it's got such a large capital available. But this business, as you know, basically it is going to take time. So I kind of understand this kind of exuberance in Jio.
Well, if not Jio Finance, well, people are betting on what the organization, the shape it can take rather than what it is right now. And early signs are visible. But let's go beyond that. Let's go to the established names. Names like Shriram Finance, Chola, which are actually witnessing buying in decline. But the IFL and the JM fraternity is continuously falling. Would you be a buyer of NBFC names in these declines?
So we do not cover any of them basically, but yes, I think IFL, we have to see. I was a bit surprised that they came out saying that they would be looking to raise capital in form of, they're not clear whether it's going to be equity or NCDs, but if it is equity, then that's a bit of a surprise actually. And that's why I think you've seen this kind of a correction happening in the stock after yesterday's run-up. But yes, that's an attractive place to be in at these prices. But I think Shriram, yes, one of the stocks which we cover and we like it very much. We have been recommending that stock for a long time and we continue to be buyers on that.
Okay, that's the take coming in on some of these financiers' names. I just definitely want to revisit some of these insurance plays. Remember HDFC Life, their premium has risen 14% on a year-on-year basis. LIC as well, a premium uptick of 67% and an AP growth of about 28% is what you've seen. ICICI Pru, of course, has been quite a smart performer and AP uptick of 38% is what they've seen. And then Max Life as well with an AP uptick of 36% on a year-on-year basis for the month of February. Nishal, what's the view on the insurance plays right now and any biases here?
So I think insurance after after a long period of time in the last 2 quarters, they have done well. I think growth is coming back for most of the insurance companies. Our preference remains to be more on the ICICI GI, the general insurance piece. There, the growth has been pretty good. Basically, there is consolidation in the industry which is happening, and the growth has been strong. Within the life insurance, I'm a bit still not very convinced about the growth prospects. Sorry, not the growth prospect, but the growth trajectory. And I would want to wait out a few more quarters before we see strong growth coming back. But there, our top pick remains to be SBI Life, followed by HDFC.
Nishal, what's the view on a lot of these capital goods industrials play? We keep on seeing these order wins come by for a lot of companies, whether it's the railway segment or the power distribution segment. Siemens in their commentary as well in a recent interview said they're looking at expanding. They're focusing on capital allocation, open to inorganic route as well. Kalpataru Power is also doing quite well. KEC is up. Within this entire ancillary of industrials, which are the stocks that are coming up on the radar for a good buy list?
So I think we have a few of the power names basically where we still believe there is some way to go. But I think most of them are now more or less fully priced for the foreseeable future, which is where we are discounting FY26. But one of the stocks which we like is Triveni Turbine there. And that stock, yes, it has also run up after the last quarter results. But I still see some way off, another 10% upside according to our target prices. But most of the others, you find basically that they are sort of fully priced. But having said that, we are still very positive on the whole sector because if you really look at the way the government is keen on bringing back basically the manufacturing sector. So they have been backing them up through various schemes. 2 years back, it was PLI, then it was defense, railways. So everywhere, basically, government is trying to see that we move away or we invest enough in our manufacturing space. And there are opportunities, China plus one and all those kind of things. So I think basically for the next 3-5 years, this is a very good space to be. Now, obviously, in between, you'll find these kind of run-ups happening. So you have to be playing carefully and wait for an opportunity to get in again. But it's a very good 3-year, 5-year story in the manufacturing side.
Right. Okay, Nishal, great to have you on the show. Thanks as always for taking the time out and joining in.
Welcome back. Well, not a big recovery in sight as far as the index is concerned. So let's take it and make it a bit more stock specific. We have Ansh joining in with the price volume buzzers. Hi, Ansh.
Hi Anisha. So Torrent Power will be the first stock in focus for today's session as stock has given a decisive breakout from its reverse head and shoulder pattern along with good volume of over 6 times compared to its average trading volume of last 20 session. There's a fundamental reason too because for the up move because the company has actually got a project worth rupees 1,540 crore. Apart from this, RVNL will also be in focus as stock seems to have given a breakout from its falling wedge pattern along with good volume of around 60% more than its 10 session average volume. Also, the company has received multiple orders actually of worth more than 1,000 crore. Lastly, Interglobe Aviation will be in focus as the stock has actually not given a decisive breakout yet, but it is still trading around that key horizontal resistance trend line. So keep an eye on the potential breakout. Also, today's volume is over 11 times as compared to its last 20 session average trading volume.
We'll leave it at that. And before we take it across to Mayuresh, let's also address what's happening across the country. And it seems the IT city, Bangalore, is continuing to grapple with an ongoing water crisis. And with the temperatures now inching towards 40 degrees, there's also been a growing call for companies to switch to work from home and educational institutes to resume online classes in order to save water and reduce the burden on employees and students. From using recycled water for toilet flushing to drilling bore wells and reaching out to tankers, hospitals are also taking several measures to try and tackle the situation. Okay, that's really the take coming in and what's happening with the situation in Bangalore right now. But in the meantime, let me take it across to Anurag Joshi as well, my colleague. And Mumbai has also had a new feat this time around, and the Coastal Road project has finally taken shape today. One leg of the first phase of the project that connects Worli to Marine Drive, the South Mumbai stretch, was inaugurated by the Chief Minister Eknath Shinde and his deputies Devendra Fadnavis as well as Ajit Pawar. Anurag joins in with more details.
Much awaited Mumbai's Coastal Road project has been inaugurated today by Chief Minister Eknath Shinde. First phase of Coastal Road has been inaugurated today, and it's a 10.5 kilometer stretch which is under the first phase connecting Worli to South Mumbai. So you can see we are traveling on the Coastal Road. You can see this is a project of cost 12,721 crore and it's been named as a Dharamveer Sambhaji Maharaj Coastal Road. Connecting Worli Seaface, Haji Ali are the interchange point. Toward the exit is toward the marine lines. For the common people, it will be starting from tomorrow onward. The timing of this coastal road is 6 a.m. in morning to 8 p.m. Monday to Friday. So entry points of the coastal road project are Bindu Mahadev, Thakre Junction, Rajni Patel Junction, which is also called Lotus Junction, Emerson Junction, and exit points are again Emerson Garden and Marine Drive, the Princess Street Bridge. So there are vehicle entry is also restricted for heavy vehicles, for two-wheelers. Only four-wheelers, cars are allowed, BEST and ST buses are allowed, but goods carrier vehicles are restricted for this coastal road project. So this was the planning of this coastal road was started in 2011. Then it got environmental clearance, clearance from Forest Environment and Forest Ministry in 2016. Then inauguration, the foundation stone was laid down in October 2018. And finally, this first phase has been inaugurated today, a 10.5 kilometer stretch connecting Worli Seaface to South Mumbai Marine Drive. First phase has been inaugurated today. For the common people, it will be open from tomorrow morning 6 a.m. to evening 8 p.m. Monday to Friday. With camera person Jeetu More, this is Anurag Shah for ET Now Mumbai.
Okay, that's a little bit of a tour of the Mumbai Coastal Road, one leg of which has been inaugurated today, and of course tomorrow it will be open for general public. But Mayuresh Joshi as well joins in on the show right now. Mayuresh, hi, afternoon. What's the call on this gradual decline that one is seeing within the mid and small caps specifically?
Afternoon, Aisha. No, I think a little bit more specific. One needs to be specifically in the broader markets. They have run up quite significantly. And therefore, I think the markets will now track two things. One, I think within the sphere of the sector that they're operating out of, what is the earnings trajectory expected for the sector as a whole? And within that, the large cap names and the mid cap names, how are they expected to fare? Obviously, valuations a tad bit on the higher side. They are moving and trading above key pivot levels quite significantly for a large part of this space. And therefore, I think one needs to be really a little bit more selective when it comes to the extreme broader end of the market, the small cap space in particular. Therefore, I think the focus areas that we probably have at Markets Mid India are either large cap or large cap, which are largely largish mid caps sort of names that we are probably looking at this juncture.
Okay, point taken. So that's a view on some of these select names, but just taking stock of some other buzzers as well. Godfrey Phillips is up a good 10%. KEC, Jio, Narayana Healthcare, Kalpataru. These are the stocks which are firing away, though Tata Chemicals continue to reel under pressure. You also have Newland Labs as well as Greenlam Industries joining that list, as well as Aegis Logistics, Philips Carbon. These are some of the other names in the red. But just taking stock of some of the heavyweights as well, because Indigo, of course, despite that large block deal, has managed to hold its head above the water quite smartly. And NMDC, of course, is reacting to the iron ore prices coming down. SAIL is also down in the trading session, and a couple of other metal names as well, like Hindustan Copper. Nuresh, what's the view on metals as a pack?
So metals as a pack selectively still looks interesting. We saw a breakout move in a lot of them. We are seeing a correction today post a little crack on iron ore prices. But structurally, the trend remains positive. Starting off with NMDC, which has been a strong trend, so closer to 215 to 220, 25 is a good zone of support. So that is where it could find a pause. Tata Steel, the longer term structure, it ended up making highs above the 2021 highs. So till the time it holds 140, the structure remains positive. Vedanta is interesting if it can cross above that 285, 290 mark, which has been a high for the last 2 years. So overall, at current levels, it's a accumulate on metals as such.
See what the OMCs as well are up to, although BPCL started off with a positive dash earlier today. But the fact that the Prime Minister over the weekend announced an LPG price cut of about 100 rupees per cylinder, it could be incrementally negative for OMCs. Of course, OMCs have had quite a field day in the last 15 odd days or so. BPCL as well is giving up its morning gains, and now it's ebbing off a little bit. But a couple of brokerages as well which have come out with their notes. Morgan Stanley saying that in the near term, the conversations with investors does point to skepticism of gasoline, diesel fuel prices cuts ahead, also of elections. On the positive side, though, they're saying that, the oil minister himself, in fact, we should bring up that soundbite as well of Hardeep Singh Puri, categorically saying that there could be no price cut anytime soon. Fuel price cut can be looked only if crude prices will be under control, which doesn't seem like a possibility just yet. So that's pretty much how the OMCs are panning out in trade. In fact, let's hear out what the minister had to say exactly.
अंतर्राष्ट्रीय महिला दिवस पर उन्होंने एक और डिसीजन कन्वे किया कि एलपीजी सिलेंडर का दाम जो है वो 100 रुपए और कम किया जाएगा. When the international price went up, we allowed the price domestically only to go up by 70%. In other words, the rest of it was absorbed. इसका नतीजा क्या हुआ? इसका नतीजा ये हुआ कि जो हमारी कंपनीज हैं उन्होंने घाटा लिया. कितना घाटा? उनका रिपोर्टेड लॉस इज 28,000 करोड़ और हमें उस 28,000 करोड़ में से शायद 22,000 करोड़ वी हैड टू रीएम्बर्स देम बिकॉज वी वांट टू कीप आवर कंपनीज अफ्लोट एंड द कंपनीज अल्टीमेटली आर आंसरेबल टू देयर शेयर होल्डर्स. गुड न्यूज इज कि बढ़े ही नहीं. International situation became problematic and everywhere the prices went up. हमारे यहाँ बढ़ी नहीं. तो मैं यही कह रहा हूँ कि आप बाहर की जो स्थिति को स्टेबल रखिए. ऑयल प्राइसेस अगर वैसे ही रहें, that's something that can be looked at as you go along. But if you have, say, an attack taking place somewhere and insurance and freight rates go up, the pricing of gas and energy pricing, and how today you have one of the lowest prices of all these energy projects, and whereas prices the world over are going up, here they are stable or coming down.
Okay, so that's about the OMCs, but the hospital stocks, as we have been pointing out, are actually doing quite okay. In fact, Apollo Hospitals is the top contributor to the index right now because the rest of the segments are tumbling away. Clearly, the market is crumbling as we speak because the overall Nifty is now at the level of around 22,322, so at the lowest point of the trading session, and that's the only pocket, and maybe IT a bit, which is supporting the sentiment right now. What's your view, Mayuresh, on defensives like IT and pharma and the top bets within those two categories?
So afternoon, Anisha. I think we are remaining very selective in both these spaces as well. Obviously, I think within the IT space, Midcap IT has performed exceedingly well. The commentaries have been very, very supportive, whether it be on the revenue growth front, both in constant currency or dollar terms, or whether it comes to margins. So they're expecting margins to probably sustain over the next few quarters as well, with very decent orders still expected to continue, even in lieu of lower discretionary spending happening both in the US and the European zone. Having said that, I think we will be keeping our eyes open for any pullback that probably happens on stocks like Persistent as an example, Coforge as an example within the mid-cap IT space. Large-cap IT largely had delivered better set of numbers than what analysts were probably expecting. And to that extent, the multi-million-dollar deals that one really expects to probably slow down a tad bit, that might be a reality for large-cap IT companies. and they might struggle for the next 2 quarters related to that. I think a base case scenario works out to be a very conscious recovery happening as the rate cut scenario start happening in the US, which is in the second part of the financial year. So being very, very selective within the mid-cap IT space. When it comes to pharma, as a defensive pack, again, I think the under ownership a couple of quarters back was very, very stark. The expectations, again, in terms of earnings being relatively stable, because a lot more launches, specifically in niche categories, paraforce, are expected to come through for a few companies. Sun Pharma has a strong pipeline on that. Oro Pharma has a strong pipeline, and so do Dr. Reddy's and Cipla. So within this space, again, I think we continue holding on to stocks like a Sun and a Cipla in our global portfolios. But within the mid-cap names, stocks like Natco and Torrent Pharma should probably kept on your radar on any kind of a pullback. They have got a specialized pipeline as far as paraforce are concerned. The EBITDA margins remain extremely strong. No delinquencies as far as the plants are concerned, and to that extent, expectations of more launches coming through in the next few quarters with stability in margins, which might mean or tend to an upward tick in earnings trajectory over the next couple of years as well. So we continue holding Cipla, Dr. Reddy's, Sun Pharma in our global portfolios. Any pullbacks on Torrent and Natco can be viewed as buying opportunities.
Welcome back. Let's take a look at where the Nifty is, because we're just around that 22,322 marks. In the last few minutes, there has been further pressure, which has actually got built up. And I think the blame really goes to Reliance this time around, because that's one of the top drags at the index right now. 25 points is what it is contributing on the downside. HDFC Bank is down 1.25%. SBI has actually managed to recover a bit from the day's lowest point. And so can be said for ICICI Bank as well, though Infosys within the entire IT pack is a bit of an underperformer, because the rest of the IT names are actually holding out okay. Infosys is the only one which is in the red, and materially so, because TCS is up 0.5% thereabouts. In terms of the broader markets, just quickly taking stock of the big buzzers. Well, Poonawalla FinCorp 361, Force Motors, Interglobe, Rail Vikas Nigam, these are some of your top gainers. While on the losing side, it continues to be Shyam Metallics, which is down 7%, Capri Global as well as Avanti Feeds. These are some of the names which are down. But Mayuresh, in the latest, correction, if I can call it, within the small cap and mid cap space, given that they have underperformed the index by 7 to 8 percentage points in the last couple of weeks, which are the names which are coming into the buy zone? Any interesting names that you guys are recommending at this point of time?
Names, as I said, from the largest mid-cap space is what we are liking in markets with India. One, obviously, I think within the auto ancillaries and battery makers, any pullback on stocks like an Exide or an Amara Raja should be viewing as buying opportunities. Two things. One, I think the kind of expansion that they're doing in terms of their lithium-ion capacities, which are expected over the next few quarters, that is going to drive up volumes as far as the electric mobility segment is concerned. And obviously, I think they are servicing both the OEMs and the replacement market as far as the internal combustion engines are concerned. So to that extent, as the transition takes place towards electrical mobility, they'll be well equipped on both these fronts, both from an OEM perspective and the replacement market perspective as well, with very stable balance sheets. In spite of the expansions that are expected to happen, not excessive leverage expected to build up on the balance sheet, which means cash flow improvement will be quite significant over the next few quarters as these milestones are achieved. The second element, obviously, is a stock like Pidilite is something that we are continuing to like in markets with India. Two things. One, I think the ensuing result which took place in quarter 3, underlying volume growth was quite robust at 10%, standalone margins in excess of 25% expectations in terms of volume growth holding up, specifically for the sealant segment, the industrial paint segment, and the construction paint segment as well, which is almost 20%. I think both these segments are expected to fire up quite significantly, with the expectations of both real estate activity expected to remain very, very robust, repainting demand coming back very, very strongly. And therefore, the volume stroke value growth should be quite significant in the next few quarters. Input costs have come off, and therefore the margins should be relatively stable, with more products selectively in a calibrated manner expected to get launched in the next few quarters and years as well. So I think Pidilite and battery makers is something that we continue to like in markets with it.
Battery manufacturers, that's something that Naresh is betting on. But let's get in some BTST ideas as well before we wind up for the day. Kunal?
So I'll go with one buy and one sell. The first one is upon REC Limited. That stock is seeing a good bounce after almost a 20% correction from 520 to 420. So reasonable bounce for the stock. Would suggest a buy with a target of 508. Stop loss could be kept at 474. And second would be a sell on JK Cement. I think fifth or sixth consecutive day of price correction to the stock. It's broken below a key short-term moving average. So would suggest a sell with a target of 4,050 and stop loss could be kept at 4280.
Right. Naresh, what about your BTST ideas?
So first is the buy on Apollo Hospitals, which has corrected 10% from the top and making a recovery trade today. Stop loss at 6150, target price of 6250. Second is a buy on Tech Mahindra, which is at a support level and recovering from those levels. Stop loss at 1280, target price of 1320.
Okay, let's now begin winding up for the day. And for exactly that, I'm going to hand it over to Vinny to walk us through the closing trades.
Absolutely. Today seems like Monday blues has come in for the market because we started a bit on the positive note, managed to hit that intraday highs, new highs for Nifty 50, but that was just at the opening, and since then we've just seen a downward momentum, managing to close on only at the day's lowest point. That's the Nifty 50. 22,300 levels is what it's managing to grab onto. Nifty Bank too at the day's lowest point, down almost 1.13% as well. Let's pull up the mid and small cap and the broader markets because that also saw a sharp fall coming in. We did have commentary that came in from the SEBI chairperson as well, and because of that we did see some bit of a pressure coming in on the Nifty mid and small cap, which was managing to hold on to some bit of a green in the morning day as well as first half of the session as well. Let's move on and talk about the advance decline ratio. Clearly today in the favor of declines versus advances as well. And which are the sectors that are falling in trade today? We have Nifty Media that is down and out, sharp fall that is seen in Nifty Media. We have PSU banks that's seeing clear pressure as well. Let's pull up SBI. We're talking about PSU banks. That's seen a bit of a pressure coming in as well. We did have the Supreme Court hearing in terms of the plea for SBI in terms of electoral bonds, and that's the reason that dismissing the plea, we're seeing SBI today down and out at the day's lowest point, closing there as well. Nifty Metal, all those stocks in focus as well. We've seen Tata Steel clearly under pressure as well today, and we're keeping an eye out on Tata Steel as well. Nifty Metal down almost 1.5% as well. Let's pull up the other Tata stocks. Let's pull up Tata Consumers. What's that doing? Because that was among the top Nifty 50 losers as well. So Tata Consumers also was under pressure. What is Tata Power doing as well? That's a one to watch out for as well. Nifty Realty, that too clearly under pressure as well. The only some bit of a green that we saw coming in today was in the Nifty Pharma that managed to, slight bit of a green. It was managing to hold on to just before that. As of now, again, it slipped into the red as well. So not much of a green coming in on that front as well. Let's talk about some of these stocks that have actually managed to hit a 52-week high this time. Let's pull up something like Godfrey Phillips. That's seen very, very strong gains today coming as well. So yes, in the mid cap side, we're seeing Godfrey Phillips, KC International, Solara Industries, as well as Zydus Life, which managed to hit a 52-week high, life high. 52-week high today as well. Other than that, I just want to highlight ITC as well. That saw a sharper fall coming in the second half of the trading session as well, and ITC saw a sharp fall as well. So yes, that's how the market close was looking like. Not much support that we saw coming in from any of these major companies like Reliance as well. So yes, keeping an eye out on the markets, closing in the red. Day's lowest point is what the Nifty is closing at.